Morning, Steve Free in Chicago with the morning grain comments. Well, it's Friday. I think the big news overnight is that prices are just a little bit lower with the overnight European model, agreeing with yesterday's GFS model that next week rains will move across the U.S. Midwest. It looks like from August 3rd through 5th, rains will be favoring Iowa, central and northern Illinois, most of Indiana and southern Ohio. And this, according to the Drought Monitor Index, is the driest area of the Midwest and where crops need the rains. We also had a lot of data yesterday. First of all, the U.S. government said they will pay farmers hurt by the trade war with China an average between $15 and $150 per acre per county, starting in mid to late August. Sign up will start on Monday and last until December 6th. And this payment is thought to be 50% of the county average, and the additional 50% or additional payments will depend upon the market development. In other words, if we have a Chinese deal or if we have bad weather, prices rally, they probably won't offer this additional money. If though there is no China deal and the weather is good and prices go down, they may have to offer this second half. For the week of July 18th, wheat futures running 25% behind a year ago. Ahead of a year ago. Shipments up 31%, forecast for a 2% increase. We have seen a little bit of a firmer tone in U.S. cash basis levels. Talk about a lower Russian crop may help U.S. export demand a little bit. The corn sales are running 16% behind, shipments 8% behind. USDA is forecasting a 14% decline. Soybean sales are running 16% behind, shipments 22%, and forecasting USDA a 20% decline. The Chinese yesterday said they approved domestic companies to buy U.S. cotton, corn, sorghum, pork, and soybeans without being subject to hefty retaliatory tariffs, according to sources. We haven't seen any purchases. It could be 50,000 tons of cotton, could be 2 to 3 million tons of soybeans. So we'll have to kind of watch and see if they start buying. Monday and Tuesday will be big days for the trade negotiations as the two parties meet in Beijing face to face. International Grain Council cut its forecast of global wheat production 6 million tons to 763, mostly due to drop in Russia. They also trimmed forecasts of world corn production 3 million tons, probably mostly due to the United States. And global soybean production was left pretty much around 348 million tons, down 1 million tons from the previous number due to adjustments in the United States. Harvest yields for the spring wheat crop tour, 43.1. That's up from 41.1 last year, but below the 5-year average of 44.7. And yesterday the funds, they bought 3,000 wheat, sold 13 corn, 4 beans, and we're pretty much even in the soybean oil. We estimate that the managed funds are now long 10,000 wheat, long 126,000 corn, and short about 55,000 wheat. We saw that open interest went up in corn yesterday and has been going up because of the U.S. weather situation. Open interest, though, in beans have been going down as they cover their shorts, also in part because of the weather, but also maybe China might come in and buy some beans. So yesterday I was in South Dakota, and there was a farm day there. A large number of farmers were asking things like, do you believe the USDA numbers? Is the market trading the USDA acreage numbers and yield numbers? What will the final acreage and yield numbers do? They were also asking about how the U.S. can become more competitive in U.S. exports. They were asking about ethanol demand. They were asking about the marketing plans from here. It's very hard to have a marketing plan in July because of the uncertainty of the markets, with corn in a 420, 460 trading range, beans 880, maybe 920. Breaking out of that range on the downside would be because the crops in the U.S. are okay and there's no deal. Breaking out on the upside is that there's more problems with the crops and we do have a deal. Lastly, there was a speaker there on mental health. She's from Canada. She was saying that Canada and U.S. farmers right now, a record percentage of them are under stress because of financial situation, and many of the farmers, especially in the United States, did not get crops planted. And so, she was talking a lot about farmers need to talk to somebody about the stress before it becomes a bigger problem. As always, these are my thoughts and not ADM or ADM Investor Services. Have a safe and profitable trading day.